Hello, it is the 22nd of February 2011, and what you're going to notice is that a lot of the charts that you may see might consider both Monday and Tuesday as one day. I won't, as I've been looking at a bunch of different charts, and places like FinViz hasn't closed the day off yet. Free stock charts didn't give me an update for today. And the market traded today like it wasn't a holiday, and a lot of places it wasn't. So the action on Monday is right here. And thus far on the early part of the session, before it actually was the 22nd of February in North America anyway, the market sold off a bit. It went from a top of 34 and change, and well, it went down about $1, relatively quick, and it's just a small move on here thus far. I mean, the day's not over. A lot can still happen, but there's a few charts that I was picking out that I really wanted to go over. And before I do, I'm just going to quickly go over this daily chart, and I find it quite interesting how the future resistance in here became a level of support pretty much. And it doesn't mean that it will, but right now it is of that. So like I said, I want to go over a few more charts, three really. And I've talked about this in the past, the direction that the market trades from the 50-day lowest point. And I was stating before, like say for example on this one, I like to get in on it above the 10% mark or around it type deal. And here you had a nice pattern where it built this little triangle here, nice little entry point. On this one in here, you had a pattern where it went to a nice low, nice little breakout in here. Now you can say here it broke above 10. The only problem with that was before getting in, you had to do something with this downtrend. Thus, the breakout for this one was right on the breakout in here. This one was a sweet one because there was an easy downtrend that had this obvious resistance point breakout really and above here. This one never really gave us that, at least on this chart. I mentioned on the 15-minute chart way back when that it had a nice entry point. But I really don't want to talk about this as far as when to get in, when to get out, although nice pullback type thing and then some sort of entry could look pretty good. But rather, the lows on the 50-day low is $26.30. That was the low that was set in the month of January. And thus it will remain the 50-day low for an okay amount of time. But rather, to think that the market is like way up right now. It's only up upwards around 30% from that low, where before it managed to get 50%, and even before then, close to 60%. And I don't have the dates on here, but this is the rally that occurred in the fall of last year. And if we continue this further, there's, like I said, there's two more charts now. This is the rate of ascent or decline that the 50-day moving average has. What this means is when you're below this line, when you're below this line in here, that means the 50-day moving average is declining. When you're above it, which it pretty much always has been with the exception of in here and in here, then it's rising. Now if the chart is going higher, that means the rate that it is rising is increasing, and that's what we're seeing right now, is that the rate that this average is going up, and it's getting close to 30 now, is going higher. However, we're still well below these levels. Therefore, there could still be a lot of room for the market to get up higher. And Finally, before my final note, the volatility. And this is like an energy chart to me. It's something that just always goes up and down. Trades, and it's always going to trade something like this. And it doesn't even trade as far as betting on it, if you will. Although there might be ways, I don't know. However, this tells us how big of moves each day has. Volatility moves from top to bottom. So if the lowest point is 30, the highest point is 40, that's a 33% move because the difference was 10 from 30. And the biggest volume we had, or movement, volatility I should say, was back in the November sell-off. So we still haven't shown signs of having the massive volume or volatility. And for the most part, when this thing gets extremely high, that is usually on sell-offs. So if we have any major blow off top or any situation where we continue rallying further, say we get up to 38, 39, 40, whatever, and then start to go down, the likelihood is that the big day could, on the downside, would be making this chart go higher. But at the same point, when you go through situations where the economic conditions, the fundamentals come into play, and whatever news follows it suggests that the market's going to proceed higher and have those big plays, then this thing can also get out of control to the upside. You'll also get the big down moves. For example, something happens and silver's got an $8 up day. Well, there's also going to be $8 down days and $5 down days. When the volatility for up days goes up to these higher levels, then it'll be like that for almost every single day for a decent amount of time. Now, once again, that doesn't mean for sure we're going to be rallying for the next few days, but just reasons here to say that the market is not up too much, as we had a nice consolidation period back in the this is the this we had the nice consolidation period in here, and all it might need is what happened before, where we corrected through time like this and like this. If we have a situation like that again, then that might be what it needs. Also, again, maybe we do have a little bit of a price correction where we come back, maybe test this previous resistance, and then boom, it proceeds higher. And if that's the case, then those charts that I've shown with the ascent of the 50-day moving average, the direction from the 50 low would work within it, as it would make the nice gain. So thank you for watching. Take care.